Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. In this video, we will be talking about two top stock picks from ICICI Securities which will benefit from the projected strong monsoon. Now both these stocks are strong fundamentally and one must be well advised to go ahead and add them to their watch list. Please watch this video to know more. Now the company in question is KSB Pumps Limited and it's available at 786.55 and the symbol for it is KSB PUMPS. Now KSB Pumps Limited is engaged in the business of manufacture of power-driven pumps and industrial valves. The company's operational segments include pump segment, valve segment and others. Now the one-year chart would reveal that this company has been all over the place and there has been no major wealth created here. In the recent market fall, this stock has also corrected severely. The market cap of the company is 2,737.81 crores, which means that the company is a mid-cap one. The EPS is 19.44, translating into a price to earnings ratio of 40.46. Now this is much below the industry PE of 48.07. The book value is 190.34, translating into a price to book ratio of 4.13. The dividend yield is 0.76, whereas the promoter holding is strong at 66.41. The 52-week high for the company stands at 938, whereas the 52-week low is 655.55. KSB Pumps has 35% exposure to the standard product segment catering to the agriculture sector. They expect the company to benefit from the increase in farm income consequent to a normal monsoon and from the government's thrust on augmenting the irrigation penetration. Now the second company on the list is Rallis India Limited, which is available at 227.95 and the symbol for it is RALLIS. Now this is a Tata Group company and if you were to look at it, it is engaged in the business of manufacture and marketing of agri inputs. The company has its manufacturing facilities in India and sells both in India and across the globe. The company's segments include agri inputs and others. The agri input segment consists of pesticides, plant growth nutrients and seeds. The other segment consists of polymers. Now the one-year chart would reveal that this company has been closing the year at a lower level than what it started it. The market cap is 4,432.92 crores, which means that the company is a mid-cap one. The EPS is 7.63, translating into a price to earnings ratio of 29.88. Now this is much below the industry PE of 45.89. The book value is 57.87, translating into a price to book ratio of 3.94. The dividend yield is decent at 1.65. Now the promoter holding here is also average at 50.09 and the 52-week high is 290. The 52-week low for the company is 205. Now ICICI Securities says that the company stands to benefit from low penetration of crop protection chemicals domestically, transition of domestic farmers towards more quality-oriented products amid the central government's thrust on augmenting farm income and Rallis' strong brand recall and also robust farmer connect. Now friends, having seen both these stocks, please don't just jump in, buy them on corrections, and if you are benefited by the content on this channel, please don't forget to share this video. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.